The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, go back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN.com. Watch us live on Tiger TV or live inside the eSignal platform, as well as on your mobile phone. Listen to live trader commentary each and every day at TFNN.mobi. Let's check out where the markets are at right now. Don't forget, we got the FOMC coming on up. We got the S&P right now is down 5 points. We got the Russell down 5.5. NASDAQ is currently down 16.5 with the Dow down at 27. So indices ran up a little bit and then pulled on back ahead of this announcement. We'll get on over at copper. Copper is up right now about 1/3%. We got gold is down about 0.5%, down 5, almost 6 points right now on the day. Silver is pretty much flat on the day. Oil's up 44 cents, 0.5% move. Natural gas up over 2%. Massive move right there. We got some great moves in oil today. We got corn right now. Corn is up $5. Soybeans up $25. That's right. Massive move there, 2.5% move right there in the soybean market. We'll get on over at the pound dollar. It is currently flat. We got the euro pound is currently up 7 ticks. Dollar franc is currently down 9. We'll get over at the dollar yen. It is down 2 pips. Euro yen is currently up 25 pips. Aussie yen up 35. Aussie dollar up 35. Euro dollar is currently up 19. And check out our bond markets, down about 0.5% right now ahead of the FOMC. Dollar index is down about a little over 0.1% right now. So just slightly bearish. All right, so that catches you up for your lunchtime market wrap. Going through, doing a little bit of, just reviews of some charts with you. We'll check these out. And just looking at, got some MVPs last night going up, going short again. Pretty simple, easy trades there. And, just one way to do it. Of course, day trading plans also. But going and looking at the euro dollar, again, just very simple, in the money trades, at the money trades, working out. So there's a lot of different ways that you can trade these. I just like to review these with you each day. See that, overnight or evening market activity. Got the pound yen just really doing a nice short right there. For you evening time traders, we got the pound dollar had a slight up move and then a nice slight down move for you Asian session traders as well. And pound dollar full of spike strikers all over the place. So we go right over here, short right at the end of the hour. Can't really do that, but it did go on down into the end of the hour. And got a spike striker buy right there. Basically, those right there expiring in the money. Another spike striker sell, and this is just simple volume spikes, and then fade on the market. Of course, depending upon price action determines the direction we go. Same thing going on over on the dollar yen. Got a nice spike striker sell right there. Not a whole lot of them today, but I did get some overnights again. So there's a lot of opportunities out there, and these are I'm talking about Nadex trades right now. We'll go into futures trades here in a second as well for you. We'll get on over at the Russell and moved up a nice deviation going down and then back on up and then back on down. Pretty choppy overall, but got a nice downtrend coming on down right there. A little bit earlier today, and so just it's been a little bit rougher. But we did get that one deviation move, like I said. Look at the 10-minute deviation right there. Expired in the money in the money there, and another one, going long, another one going short. I mean, just some nice, really helping you call those turns when they're happening there and grabbing some. NASDAQ slightly down as of 1 o'clock there. We got gold. Had a great move down right there. Just shot right down. It was a little bit flat, choppy for a while, and then it decided to go ahead and make it happen. In the news today, we got Wall Street, sort of flat overall. Energy, Facebook, slipping on down. We got dollar franc moving on down to an 8-day low. Oil stock piles are rising on up. And but, there's been a lot of volatility in oil today. We'll check that out. So Canada stocks, the TSX, they're declining ahead of the Fed statement. And gold, again, is down right now as the Fed announcement and rate hikes. Basically, their statement is the main thing everybody's looking for at the moment. Euro dollar jumping to a one-week high at 27.70. And the dollar said tumbling, not really tumbling hard, but going down a little bit ahead of the FOMC. We got the dollar CAD hitting 3-week lows, despite the positive data that's come on out. Today's news, what has come out today that, you want to be aware of? Let's go ahead and hop on over. And we can check out Forex Factory right here. We had a few things come out. We had the weekly oil inventory report. We have FOMC coming on out. So, we want to make sure we're definitely ready for that. Some of the things that I put and I look at on the oil inventories, I look for, like spike striker type moves. I'll look at expected ranges. Let me pull up an oil chart. We'll check that out right now, since that's been so much of a topic today. And flip on over. I'll open that up, put it up there for you, and we'll dive in a little bit on oil over here. All right, so oil this morning had a nice little long going right on up early in the morning. Took off right there, 81.90, and basically popped up, stayed in, didn't hit the stop, kept going, and basically had a buy right over here, and then hit target 1, hit target 2, and hit target 3 right there. Done with the trade, target 3. We'll go around and look at a reversal in the trade. We got a short just within a few ticks there, so right up there. Within a few ticks of it, go in, go short, put your sell in, market, and if you were in the trade, and then it came on down, and it took profit on that one as well, giving a few tick variance. That's pretty much the summary on oil so far today. Been pretty choppy, and of course we had that inventory report, and so if I go in and what I'll do is I'll look at like ranges, and I'll look at potential volume spikes going into oil. And looking at the ranges, looking at the volume spikes on oil, because that's really, really helpful, especially since that inventory report comes out pretty much the same day every week, and seeing, hey, do we get a big move or not? And I'll look at, neutral trades, short trades, long trades right there. So we had a spike tracker sell and in the money. Would have popped around a little bit, but definitely expired still in the money right there, right at the end. Didn't really have a big move on oil inventory at all, specifically. Just overall, the movement was pretty great today. We had also some other sells earlier this morning, so on the spikes. But let's see. Oil inventory came in. Let's see, where were we at? We were 2.1 million on expectation of 3.3 million. And what I do whenever I'm looking at this is I'll actually look at the report itself. I'll go back and go, okay, we did drop a little bit below where we were, last time. They expected 3.3. We had 2.1. Last time we had 7.1 million barrels. And then also look at the release. And let's say, hey, we had a U.S. commercial crude oil inventory increased by 2.1 from the previous week at 397. And it says we're near the upper limit of the average range for this time of the year. So basically that's, even though it was less than expectations, we're still at a higher inventory limit than usual. So it wasn't necessarily like a massively bearish sentiment when that came out. All right, so let me clean that up and get that off the chart real quick. Go right there. All right, now what do we got for FOMC that's coming on out over here? Looking on over at the FOMC reports and some things you can do on that. One, if you're trading futures, Forex, be really cautious, okay? Things can go just insanely nuts. So either have tight stops in place, have spreads in place, have some spreads to hedge off your positions. Just be cautious. And it's one of those buses that can really run you over. As far as the movements we usually have, the big movements I like really whenever we have the press conference. That's usually when we get the biggest move, by the way. When we have the press conference. So we don't have the press conference today. We just have the statement and we have the announcement. And then we have our ranges. And so we can go over here. We can look at, let's see here. Let me pull this up. We'll look at, euro dollar right here. So on the euro dollar, hopped on up, came on back down. And U.S. FOMC Fed funds rate news being released at 2 o'clock on Wednesday. So right here, what we're going to look at is we're looking at basically about a 35-pip move usually before. Let's see if we're within that range going into that so far. Let's see here, and that's so 35 pips. Where are we at? 2 o'clock. What was our high there at noon? We'll measure down here. About 25 pips. So we're still within pretty much the expected range and movement on the euro dollar. And so these are trades that I'll go into and I'll look at, like, here's 30 minutes before the news that are coming up. What's the expected move? Usually, if you can pull off an iron condor and Aussie dollar for $20, euro dollar for 25, pound dollar for 30, dollar CAD for 20, dollar franc for 25, US yen for 20. And, basically just inflated implied volatility. Sometimes it allows you to take it way down, though, on the 2 o'clock expiration, making it more difficult. But those are basically the expected ranges. It usually stays, those FX pairs usually stay right within those ranges in the last 30 minutes leading up to the FOMC announcement. They can get sort of flat, and then they go pretty nuts. All right, we also have basically the FOMC of the New Zealand dollar coming out. That will impact the Aussie and yen quite a bit. So just be aware of that. That'll come out 4 to 5. 4:05, Visa is going to be releasing their earnings release. They're impacting the Dow. So if you're trading the Dow, just be aware of that one. Tonight, we got Aussie dollar import prices coming in 8:30. And then we also have the mid-year economic fiscal outlook for the Aussie. So 8:30 and 9:32 Aussie reports coming on out. Tonight, for overnight, what kind of trade we got set up? We got an iron condor on the pound dollar. The nationwide HPI news release will be released at 2 a.m. And you can buy a Nadex spread below the market, and you can sell a Nadex spread above the market. Buy the lower spread, sell the upper spread. And entering at 11 o'clock for a 7 a.m. expiration. And going for a minimum profit. When you combine the maximum profits of the two spreads, you want that maximum to be at $30 or greater to be able to do the trade or leg into the trade, whichever way you want to do it. That'll be your news for tonight. What about what's coming up in the morning? The German preliminary CPI will be coming out. There'll be some franc news coming out at 4 a.m. The European and Spanish flash CPI and GDPs will be coming out there at 4 a.m. as well. So a lot of overnight volatility expected out of that. German unemployment change coming out. We'll have the advanced GDP and price index tomorrow morning at 8:30. That can cause a lot of volatility, so definitely be very aware of that one. We also have unemployment claims at 8:30. And we have natural gas inventory we have every week right there at 10:30. Tomorrow evening, we got New Zealand building consensus on Thursday. We got the Aussie dollar PPI. And a couple more reports we'll go over when we get back right after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, going back here to the Diagnostic Trading Hour. And we're checking out where the markets are at right now. We're talking about the FOMC. We're talking about the news and getting y'all caught up on that. For tomorrow night, some things I was talking about to be aware of. We got the yen various reports coming on out at 7:30, and we got the yen monetary policy reports coming out at 11. So both of those impacting the yen. Could also have an impact on the Aussie a lot of times. We already talked about or just in case I didn't, Aussie dollar PPI private sector, iron condor, buy lower spread, sell an upper spread on the Nadex platform, minimum profit of $25. And then we got Friday, Halloween coming on up, and then the first All Saints Day there. On Friday, we got the Bank of Japan there doing an outlook report at 2 a.m., and then having a press conference at 2:30. With the Euro French consumer sentiment spending coming out, which will have a little bit of an impact on the euro, but not massive there at 345. And then a lot of just a slew of different euro reports coming out will cause a little bit of volatility at 6 a.m. Don't be caught off guard by that. The Canadian government's going to be releasing their GDP news at 8:30. That can cause some volatility. Definitely be aware of that, but usually it stays within a 30 pip range, allowing us for an 8 a.m. entry on a 10 a.m. expiration for a $30 minimum profit iron condor. As far as earnings coming out on Friday, we got Chevron and we got Exxon, both coming out in the morning. Chevron coming out at 8:30, Exxon coming out at 8:55. Then we got basically four different personal spending, personal income, employment cost index, and core PCE coming out on Friday morning at 8:30. None of those are really major impacts, but still it's wise to know that they are coming out. And then a few things going on that night that in China that could be coming on out to be aware of. And I think I need to update Chicago PMI here. Looks like that's supposed to be, well, that is AM. I just got to change the time on my calendar piece. But at 8 a.m., we'll be having that come out. So that's also something, a little bit of, basically a lot of little news coming out. And then same thing on University of Michigan Consumer Sentiment, 9:55 a.m. That'll be coming on out. And that is your news wrap for the week. Gets us all caught up right there for this week and current news and current markets. We got tomorrow's news. Also, natural gas. We got natural gas inventory. Don't forget about that coming up tomorrow. And so let's pull up a natural gas chart real quick and just talk about some possibilities, what we got on here. Okay. And there we go. Get that uploaded. Once we got that up on here, then what I do is I will add on expected ranges. Okay, check out the expected ranges right there. And once that's uploaded, go ahead and let's figure out what the expected movement's going to be during that specific hour when the news comes out. There we go. It's like, come on. Just taking a minute there. Okay, so we got that up. Let me check out the expected ranges on natural gas. Let's go on over to Thursday here, and let's check out the 11 a.m. expiration. We got a 90 pip expected move from high to low on Thursday. It's like 40 pips before, it's 35 pips after. It's 90 pips right there. So you could look for either like a straddle or strangle trade, as long as you can get a 1-to-1 if it hits that 90 pip move. So getting in like at 10 for an 11 a.m. expiration, okay? Or you could go in and you could do an iron, butterfly or condor if you can get 190 pips wide for, outside the range, and ideally somewhere around $35 to $50 if you're doing an iron butterfly. If you're using binaries, buying the lower binary and selling the upper binary. So you could range bound trade it, or you could breakout trade it. Either way. But definitely if you're breakout trading it, get out when it hits that high to low move because you don't expect much more of a move. Let's also take a look over at the VIX. Been a few days since we talked about that here on the show. And bring that on up, see how we're doing. And so put up the VIX report. We had that massive spike, but things have come back down a little bit into normal ranges. Taking some of the premium out of the markets, which in some ways is good. But tightens bid-offer spreads up and things like that. But also, didn't give you all that premium that you like to have either. So, but, it's lowered back down pretty much to normal levels at the moment. And it dropped fast. All right, we'll be back right after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're going back here to the Diagnostic Trading Hour. We're talking about the VIX and what's been going on with it. It's been dropping way on back down there. Checking out the seasonality of the VIX. It popped up there in August, a little bit, earlier this year than normal, and then, but it did pop up as expected right there in September. We expect things right around the end of September to pop up. They popped on up. Usually they drop down by the beginning of October, unless things are going a little bit nuts. But in this case, it flew up and now came down actually a lot harder than normal, a little bit lower than we are on the normal seasonality. Going on into, seasonality, there's a lot of different ways we can look at it. It's a 5-year seasonality. We can look at a 20-year seasonality on this and, see how that compares. So, 20 years when it goes up and starts heading back down and usually heads down into the end of the year. With maybe a little bit of a spike, around the end of October. We're pretty much done with that. So usually starts moving on down would not be an abnormal thing, and that's over the last 20 years. If we back it on up and check out the seasonality of how the VIX, and, why does this matter? How does this work for you? This will, like the last few years, because it lets you know, okay, well, usually implied volatility goes down, so I need to make sure I definitely have down some lower IV strategies that I'm going to use that are, very defined trading plans, very, potentially out of the money type contracts that are really going to be cheap and close. This is actually going to work out great if IV stays low with these new 20-minute binaries. Nadex is launching those live next week. So that will help out quite a bit as well. But anyway, so IV heading on down and stayed on track with seasonality, but just it shot up and then shot down really hard, a little bit lower than the 3-year average right now over on the volatility index there on the VIX. All right, that gets us caught up on the VIX. Let's check out. We can go through some day trade plans. We can check those out sort of see where the markets are at, any setups that may be remaining. But again, we got to use use some caution, okay? Because we got that going up. But before I hop into that, just wanted to remind you of one more thing. Again, that 20-minute binary contracts, they are live inside the demo platform at Nadex.com right now. So if you want to check those out, go to Nadex.com, click login, go to your demo account. If you don't have a demo, there's a link at the bottom of the page under trading right here. It's sort of hard to see. But right here under trading, you'll see demo trading platform. Okay, just click on that. And you can get a demo trading account, then you can log in. It's easy to set up. It takes about 10 seconds. Okay, it's really, really easy. And once you log in, you have $25,000 of funny money you can play with. You can build it, lose it, whatever. It's demo money. And so once we go on over here and this loads up, there we go. Takes it a second sometimes. They got the 20-minute binary contracts, which are currently listed under indices. And you'll see right here we got the S&P, and you can look at the contracts that are coming up, and they're available. You got the 140s, and then you'll have to refresh them every 20 minutes unless you're using the scanner. If you're using the scanner, then you don't have to do that. Okay? Makes it much, much easier to do. And let's see here. I'll show it to you, but what it's doing is it's bringing up those 20-minute binaries. You don't have to hit the refresh button. What do I mean by hit the refresh button? You have to hit this button literally every single 20 minutes to be able to see the new contracts. If you forget, you're not going to see them. Okay? Also, you have to hop between every market. You got to go S&P, and then you got to go small cap, U.S. Tech, Wall Street. There's only 4. What if you want to focus on trading those markets? And you don't want to have to hop around and refresh and everything else and do the math and calculate everything constantly. Well, what you can do is you can go and see how these are going to expire out is if you go over to the scanner, then what you'll see when that loads on up, give me 1 second, we'll pull it on up here. And once it loads up, you'll be able to go in and click on the binary scanner, click on the demo at this moment, and then live will be up. Like I said, it'll open up on Monday because these are right now currently on the indices only. But right here, if I click on demo, and I'll choose these contracts right here, and I can say, only show me stuff that expires in less than 30 minutes. And then right down here, what you're going to see is the 140 contracts right there. And then we got the new ones coming out, these 2 o'clock ones, and we'll have the 2 o'clock 20 minutes coming out as well when we launched out. These are actually the hourlies that started at 1 o'clock. Okay? Why do I bring this up? Well, if you're over here inside the Nadex platform and you wanted to look at the 2 o'clocks when they do come up, notice how they're not even showing anymore. Okay? You can't see anything. There's no quotes. Not showing. They'll show red X's here in a minute. But if you wanted to look at them and you want to look at the 2 o'clocks, after you hit refresh, you'd also have to go over here and look at these 2 o'clocks. So you got 2 binaries expiring in 22 sets. The 12 to 2s that are expiring in the next 20 minutes. And you have the 20-minute contracts that'll be opening up here in about 30 seconds that'll be expiring, 20 minutes later. Okay? So you're going to have to hop just to look at everything that's available, you're going to have to hop back and forth. So if we hop on over here, when the new one's coming up here in just a moment, then what they'll do is they'll pop in, we'll see them. And you can actually go over here right now. You'll see the red X's there. That means they're expired out now. And we don't see the new ones unless we manually go down here and hit so we're still seeing 140 unless we hit the refresh button. So once you refresh button, again, that has to manually be done. If you're in the Nadex platform, then you'll see the 2 o'clock contracts. Whereas over here, I'll just drop off a few of these so we can narrow it down there. Right there. Now I can see both of them. I can see the 20-minute, all the 20-minute ones, and I can see the ones that are 1 to 2 o'clock. So, for example, we got 76 right there, and we got the 76 contract as well. So, picking those up, making that as easy as we can for you along the way. But anyways, if you have any questions about that, definitely let me know, and I'll be glad to help you out. But that's how the demo works. And again, the big benefit is it's helping you pick up all of those contracts. All right, so let me pull up one more thing over here, and then we're going to hop into our day trading plans and get all those together. I just want to grab one chart real quick. Okay. Let's pull up. We already got natural gas. Let's get the ranges out of the way for the moment. Just make the charts really, really clean. And remove that off. And let's go ahead and let's check out where gold is at. Now, gold pits have closed, but the gold, if you're trading futures, gold is still open. And let's see what we got, okay? Well, today we have, let's see, we got this right here, and I just want to grab one more thing. All right, so we got that short trade that went off that worked out really well for us. And we had a sell, and it did not. Now, what happened was we got in, and within 3 bars, we got to break the low, or the second bar has to break the low. So we look at the low. Was the low broken? Let's see. Low right there, 1226, 1226. So low was not broken. So we're in the trade, and then 1, 2, 3 out of the trade, about 7 ticks higher. All right. So just limiting that risk. Come on back down and get it. And then 1, 2, 3, about 7 ticks. So gets us again. But then goes in and we grab a nice big move there for 5 points, 50 ticks. So, we limited our risk a couple times just because it was choppy. It's not worth staying in. I'd rather give up 7 ticks a couple times in a row and grab 50 ticks, $500 on a trade, and end up being net profitable on that trade. So now this one you actually didn't have to give up on because you could have, since the third bar broke the low, wasn't paying attention there, it actually did go straight down. So actually it was only that first one. So first, second, third bar didn't break the low of the bar we got in on at the entry price there, 1227. And this bar right here ticked, and then 1, 2, 3 hours later did get it, so we actually are able to stay in the trade. Moves on down, makes 50. So not bad. We made 50, minus 7 ticks out of 50, 43 net positive ticks on that. As far as additional targets, don't have any additional targets. That was the low that was called. We'd be looking at maybe a buy at 12.19 or sell again up at 12.27. Okay? And that wraps up gold for us. Hopping on over and checking out oil. And we'll load that one up, see if there's anything left there. We had the long, with the buy, we went long there at 81.90. And had target 1, 2, and 3 up to 82.74. Got real close to that, pulled back, came back up, and did hit it. If you stayed in there, went on up within a few ticks there, had a short at 87.50, and moved on down to target. We only had one target down to 82, hit that target. And so right now we have sells up at 82, and we have buys down at 81.90. That wraps up the commodities there. Looking on over at the Forex, let's check out our FX pairs. Let's go in and pull up the Aussie dollar. So Aussie dollar here being pretty choppy. It's got in, has not hit its stop, really just chopping around. It's one of those tough calls. You got FOMC coming up. If you're still in the trade, right there, you're down about 11 ticks. That's not a big deal. You may decide just to say, you know what, it's not worth it. Unless you got maybe an out of the money binary, you headed off with the spread. Just be careful on that trade right there. Let's see, looking on over at the euro dollar. Popped on up, and we went on up there and went short. So if you're going up into a sell, I'll give it, a 5-tick variance. If I'm going down, obviously it's going to have to break it to be a short trade. But on up, you don't want to miss out on that little bounce right there. So anyway, it goes right up to it and comes on back down, and we get that short at 27.45. We actually have another potential short on the euro dollar at 27.34. If it continues on down with a target of 26.95. Okay, so that would be the next trade I'd be looking at potentially on the euro dollar. Hopping on over, looking at the pound dollar. Seeing where we're at on this. Basically just been inside of a range. Really at no man's land on chart analysis here. I got a buy down here at 1.6100 and a sell possibility up at 61.85. So really we're sort of hanging out inside that range. FOMC could change that, but that's where we're at right now. Going on into the dollar yen. And let's see, on the dollar yen, it looks like same thing. No man's land. Looking at a sell up at 108.20 and got a buy down at 107.90. Russell popped on up on us this morning. Let us move to break even, but then turned right back around. And basically what I do is I just use a simple fib of 50% to my target. And if I'm 50% of my target, I'm going to remove my risk and move to break even. Trade went in, remove the risk. Right there immediately. It's pushing on down and looking to go short there to 1137. So depending upon how the FOMC comes on out, just be real careful. This thing could pop down, fly right back up on you. Okay? So you're definitely going to have a hedge on. I just would, don't just do an outright future. That thing could just like in a matter of seconds. It's one of those things, if you're not sure and if you're worried about it, then just sit on your hands and watch, because FOMC is its own little animal. S&P flew up, came right on back down, and it's looking for another potential buy. So we got a buy here. We got a sell on Russell. So we got a buy on the S&P at 1971. We got a sell on Russell right below the market. So a little bit of, opposing right there, and then especially right before that FOMC. All right, that pretty much gives us a market wrap, and trying to see what else we got on. There's just, like I said, the gold has that nice setup, but with it about being wrapped up, I don't think we're going to, it may pop back on up and come back down, but, the issue is the volume's going to be really low, except for right during FOMC, and then it's going to die off pretty quick on the market right there. Okay, so what else do we got coming up that we need to be ready for? Let me see here. We got through quite a bit today. One of the things is go in. A lot of people are asking about how to trade spreads because they're looking at the futures. They like trading the futures, and they're trying to figure out exactly, what it is they are like. How can they limit their risk? I have traders right now, and they're like, I don't want to risk $10 a tick right now. I don't have, especially if I'm risking, 3 or 4 points or whatever. That's just too large a percent of my account. I still want to trade effectively. I want to use effective stops, but that's just a big stop for my account size. And what can I do about that? And so what I tell them is, and at first they're like, well, I don't want to trade these binary things. And I totally get that. I actually didn't even trade the binaries for 9 months. When I traded Nadex, I traded the spreads for the first 9 months before I even touched the binaries. And the binaries are cool, but they're just a whole different animal. You're basically trading delta of an option when you're trading a binary. But the spreads are more like trading a call or put option, but made for day traders. And they're really simple. They're $1 a tick. Okay, so if you want to do one spread, it's $1. If you want to do 10 spreads, then it's $10 a tick. If you want to do 3 spreads, it's $3 a tick. So they're all $1 a tick. So that's the first thing you want to learn for the Nadex spreads. If you get that they're all $1 a tick, well, that makes everything just a lot easier. From there, you can go in. You can check out the different markets, and I'll show you how to pick a spread to match a future when we get back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, going back here to the Diagnostic Trading Hour. So what we're talking about right now is the Nadex spread specifically. And traders are they're wanting to, lower the risk. They're wanting to trade futures, but they're not comfortable with having the stops at like $10 a tick. And some traders will go there, they try to find these other, well, look, I got these micro golds, or I got this or that or whatever. And then they'll realize the bid-ask spread's really wide, the liquidity's low, they're not heavily traded instruments, they're much harder to trade. They're not the liquid futures. And so there is another alternative, and like I said, that's going to the Nadex spreads, where you can go in here and you can say, you know what, I want to trade, Russell, but I don't want to trade, at $10 a tick. Or maybe I want to trade, oil, but I don't want to trade at $10 a tick. Well, you could trade mini oil. It's not too bad. You could actually trade mini oil at $5 a tick. Or you could go over, you could check out trading on Nadex. And you got till 2:30 expiration in the day, which you're probably going to be closing out anyway, especially if you're worried about account size. That means that you probably don't have the margin to hold the thing over. And right here, you got what you want to do is you want to pick one. Ideally, if you want to mirror the futures market, you want one with like an end-of-day expiration, okay? And you also are going to want one that has what's called a close proximity to market, all right? So, I'm looking at 2:30 if I want to mirror the futures market here. So I got these contracts. If I was wanting to just, for example, buy oil, those would be my first choices. Well, I pull those up and look at them and go, okay, well, Some of these, that one can't make any profit. It's maxed out already, so I don't want that one. I don't want the risk reward there, or there, or there. And then I say, don't like that one either. Okay, so I got these two contracts. Both of them are $230. One of them can make $424. One of them can make $224. Again, the max risk on the contracts is $75. Now, that's only if I hold the contract till expiration. The proximity is really low. It's only 4 ticks away, which is, 4 cents in oil, which is nothing. It's you could go and you could buy that contract just like you'd be buying oil, and you could sell out of it just like when you would sell out of oil on a chart. Just trade it off the chart. What does that proximity mean? That means there's like 4 or 5 ticks of premium in there, and if you hold the thing all the way till expiration, you'd be giving up about 5 ticks. But if you get in, you cover a bid-ask spread, you get out, time, it's going to take time for that 4 or 5 ticks to erode. It's not like it's just gone because you get in the trade. But you won't even notice it. If it's 4 or 5 ticks, you're really not going to see the impact. The big benefit here, again, $1 a tick. And so you could do $1 a tick, $2 a tick, $3 a tick, $4 a tick, whatever works for your account size. And again, you have a capped risk on the trade. Also, you can put up less margin, because you're doing obviously a smaller amount. Sometimes it's less margin even if you did a bigger amount. But you're talking $70 on the trade. So between these two trades, both expire at 2:30. All right, they're both got a close proximity, basically less than 10, and they both have the exact same risk, but one has more reward than the other. Well, then obviously take the one that has the higher profit potential. So if you want to stay in that trade for a higher move up, you can. That's pretty massive. That'd be a 429 tick move, which $4 move, which does happen, but not often. And so that's the spread you could choose to buy with right now. And if you wanted to sell, what would you do? You go down, same thing, go through the same little process. 230s, click on those, the ones that you're potentially interested in on selling. Drop off the ones over here that you see that are not within your favorable risk reward, like that has a massive return. All right, we'll pick this up tomorrow. We'll go into some more details into just on using the spreads. All right, hope you all have a great day. And I'll see you tomorrow right here on the Diagnostic Trading Hour. Thank you.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.